Greetings, everybody. This is Jeff Scott, and this is my weekend review for, what's the date? The 14th. It's early in the morning on the 14th, so no futures are out. If it's soft, it's because I'm at somebody's house and I didn't want to make a ton of noise. So I had a webinar, live webinar on Thursday, and we called for the bounce. So now the question is, we had our bounce. Does this signal all clear? And I'll cut to the chase. It may, but it doesn't mean I'm putting all my money at risk and believing that that's the case. My email address is hgsidoc@gmail.com. Feel free to reach out to me with emails with any questions. I do have an upcoming meeting on November 28th. It's filling up. If you're interested and haven't yet, let me know. Drop me a note and I'll tell you how you can pay and register. It's $500, 1 day of meetings, and probably 3 pre-meeting webinars, 3 post-meeting webinars, potential golf the day before the meeting. And for those that have the time, John Person has a 3-day meeting at the same place starting the next day. This is for education purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. I pay for everything that I use, and I take no advertising or payments for anybody to say good things about them. And trading involves risk, and you and your loan are solely responsible for any investment decisions you make. I always talk about becoming your own guru, which is what was taught to me by Ian Woodward. My background was starting with CanSlim, improving with Morales and Catcher, much more improving in addition with Ian Woodward, Ron Brown, who was his partner, who, like me, was in the seats in the beginning, but he moved on to be Ian's partner. I learned a lot from my buddy out in the Northwest, George Lee. Van Tharp, the king of position sizing and money management, Cigar from Superior Profit. Over the next few weeks, I'll probably talk more about Moxie Trader and how I use it. Interesting way of looking at higher time frames, which I always do anyways, because I think it's difficult to make money if the higher time frames are going the opposite direction. And lastly, not to forget John Person, whom I've really learned a lot from over the years and continues to amaze me with how his indicators and his tools. I own a lot of different programs. What do I need? I need TradeStation, Thinkorswim with the indicators I purchased. And then HGSI is my go-to product for aftermarkets. There are other things I could use, but none of them are as inexpensive, all-encompassing, contain the data on my hard drive as HGSI. EdgeRater automates some things I used to do in Excel spreadsheets, and this is a time of year to think about seasonality. Here's the website for HGSI. Notice a free 30-day trial, and under investing strategies, you'll see lots of videos by me, Ron Brown, and others. Stock patterns are cyclical. Every time I'm the first to admit that I've been concerned that we've entered the sell zone, the next day it pops up and goes higher. It feels different this time. Certainly we've had anywhere from 3.5% to almost 6% correction in the last week alone, even with Friday. Remember these type of stocks that I buy, high growth stocks, they go up like rockets, but they fall like rocks. And you can't ignore your stocks. And if the market continues to roll over, you need to have some strategies to protect yourself. For me, it's buying puts. It's selling calls against my positions to pay for those puts. It's shorting stock. It's buying contra ETFs and looking at bear call spreads. I've got every one of those on right now. Now, that said, I still have a lot of long positions, and a lot of the puts were protecting those positions that I have long. I've had some major profits this year. I hope you have too. I want to protect them. And in some of the cases, I want to delay tax hits until next year. And so buying puts is paying a little bit of the tax, but it means I profit if the stock goes down, and I can divert some of the major gains until next year without putting them at risk. So I always like to start with my sector review, and I think you could see a sea of red. What wasn't strong on Friday? Real estate. Real estate's been strong of late, so I wonder if that is meaningful. Other than that, it was a very broad-based rally. Financials were mixed. We had earnings come out from JP Morgan, Wells, Citi was the third, and they were mixed. Let's take a look real quickly in Thinkorswim at the major markets. This is daily. Let's open this up to a chart, a single chart. All right, so we had been living in a channel. Down here is a 200-day moving average. Let's bring this out to a full year's worth of data. And you could see that we broke, and we did get, this is a bullish sign on the E-minis, just above the 200-day moving average on Friday. We'll look at the cash indexes in a little bit. Now, we haven't seen this sharp of a reversal where it came down and bounced in some time. And I'm one who believes that we're more likely to see something like this with the retest of this low. In fact, if we retest that low and held, I would probably be a lot more excited and more bullish than I'm feeling right now. This is the E-mini. Let's take a look at the NASDAQ. The NASDAQ also looks good and perhaps even better than the E-mini. And Friday was a big NASDAQ day. Got above the 200 in a very nice looking bar. It too, though, broke out of its channels and pretty significant breakdown. That's probably a little bit more bullish appearing. But again, is this going to be a V bottom, or are we likely to go back up and then retest? I don't think you can say for sure that we're done going down. If you look at the Dow, same story again. Getting above the Dow futures above the 200, and just this is kind of what I would expect, some bouncing, backward filling here, not a rapid move back up in recovery, but it can happen, and that's why I said I still have some long positions. If we look at the Russell has broken down hard and actually was weakest of everything, barely turning positive on Friday. That doesn't look very bullish. The VIX moved up high on Thursday, came back on Friday, but still quite elevated, much less complacency in the market. And if we look at the dollar, and let's look at a little bit longer period of time, the dollar has pulled back a little bit, and we'll see what the dollar does as well. So I don't think we're necessarily out of the woods, but we'll talk more about that as we go on. Go back to my PowerPoint. I always like to look at in my Genesis charts, daily, weekly, and monthly charts, and E-minis, NASDAQs, Russell futures, NYSE, and the YMs. And we can now see that although the monthly charts still look good, we've got monthly sell signals coming in the Russell and the NYSE. We got weekly sell signals in all of them except for, actually, if I hit that arrow, you'd see a sell signal there on the Dow as well. So the weekly and the daily are now in chop, and we're starting to see sell signals coming in on the monthly. That is not bullish in my mind. Now rates in white pull back some this week, but they're still above my critical levels. And for those that weren't here a couple weeks ago, these have been sitting on my chart for 2 years as when I would get interested and nervous. And we're above nervous on both. Now, high rates are usually good for banks, especially regionals and insurers, and they all sold off this past week. Very broad market sell-off. AD lines rolled over with the indexes, and you could see it better here that the AD and the NYSE dropped. The ETFs on the diamonds, juice, spiders, and Russell and transports dropped with it, the biggest drop being in the IWM. And you could see TLT actually at the end of the week turned up some. Perhaps that was a defensive play. Breadth weakens and approaches oversold. These are stocks above the 200, stocks above the 40. If you look even more short term at the 3-month new high, new low ratio, we did cross below this line within intraday, but we're down at expected to bounce zone, which is why I had my webinar on Thursday and talked about an impending bounce. Now, again, the question is V-shaped bottom and run to new highs, or do we move up and then fall over? Daily McClellan shows a significant drop on the S&P 500, and at least on the daily at minus 2228, perhaps getting to where you'd expect a bounce. Yet when we look at the weekly, you could see that the summation index is nowhere close to being at a point where you're definitely going to reverse. The buckets, I think they were about 60% on Thursday. There's still 35% of the stocks are below the lower Bollinger Band, and 94% are below the midline of their Bollinger Band. Notice I've updated my lists in EdgeRater to October 12th for this weekend. So this is the date I ran the test, but this is the date that'll be there for the next 3 months as I update my list quarterly. There was no Hindis, but if you look at the percentage of new highs, they're less than 1%, and you need to have new highs, not just new lows. So I wouldn't expect to see any Hindenburgs until we set new highs, and we're nowhere close. Market tone, red is bad, and except for the NASDAQ, it's pretty much red everywhere. And sector strength, I always mess something up. Weakens. I always find one that I forgot to update. And sector strength shows the weakness is fairly broad-based. Canaries in the coal mine, I use one word, broken. Yes, they had a big gap up on Friday. But if this was a stock, I'd be getting ready to short it because that 200-day moving average is likely to be resistance. Summer solstice leaders, is this a bounce? Or is this going to be a bear flag and a failure at the 50 and a fall? And I think that's really the question in the market. Are we setting up for a bear flag and further downside, or will we get that V bottom? Know your news and earnings. So this week in red, retail sales on Monday, industrial production on Tuesday. Wednesday got some petroleum numbers, FOMC minutes. That could be moving. We have a lot of question now about how fast they're tightening, especially going into the next month. Thursday and Friday, we got a bunch of Fed heads speaking, and we got some employment numbers, Philly Fed, on Thursday. But what's more important is the right side. Now, pay attention to this paragraph. It is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. This is a busy week of earnings. If you are a trader or investor, it's highly likely that you own some of these stocks. Bank of America, Schwab, Goldman, Netflix, IBM, Morgan Stanley, Abbott, United Rentals, PayPal, American Express, Procter & Gamble, Schlumberger, Cleveland Cliffs. Busy week of earnings. So, a couple of thoughts. This is the package I'm seeing. Most of the stocks that you're going to look at because of the last 2 weeks are going to be in downtrends. So Netflix, for example, starting on October 19th, is up 6 out of 10 years. It's only 60%, 11.7% on up years. On down years, it's down only 4%. So it paints a green bar here on the seasonality trader. But it's 6 and 4 in a downtrend. Hard to get behind that. One of my other favorites, Intuitive Surgicals. This is up 7 out of 10. But, you look at the 7.3% gain starting on October 9th versus a 5.4% loss. Nothing to write home about. And really, as I look at this, it doesn't look that exciting until I get into January. Now, any of these may bounce. I looked at a bunch, and this is very typical, even though we're in a seasonally strong period of time, at least we're getting into it. Most of the stocks are in pretty profound downtrends. Now, is it likely to bounce off this level? It could, but if it's in a downtrend, it's going to bounce up to support and continue going down. So you have to be careful here. So what are my thoughts? We got the bounce we predicted. The major indices dropped at least 3.7% on the week. They rallied up to their 200 SMA. I'll show you what a bingo is, but I see them everywhere signaling babies out, thrown out with the bathwater. Earnings season begins in earnest, may lead us out of the pullback or push us deeper based upon not just the earnings, but projections, further buybacks, margin pressure. News is not going to stop. Trade wars, Italian banks, and impact on U.S. banks. Rates and dollars will be in play, as well as more and more mudslinging with midterm elections. And like the averages, my portfolio popped with a bounce. I'm still weighted long with remaining positions. However, I'm not convinced the correction is over. So I bought puts on my remaining positions, standard puts to play the market to the downside, and contra ETFs. I will cover quickly if the market continues higher, but I believe we will ultimately retest the lows from Thursday. So let's do a typical top down. I won't look at a lot of individual stocks tonight, but let's see what we can do. Just to look at in TradeStation, I like looking at the major indexes just to get a sense of what I'm seeing with my John Person indicators and a few of the other things I use. So let's just take a quick look. So here's the E-minis. And notice, actually, is that the E-mini? Yep. How deep we fell. This is a daily, weekly, and monthly. The arrow is the John Person signal. Sell, weekly, still in a monthly buy. The paint bar color is from Alexander Elder. Red means the selling window's open. You should be shorting or holding. You shouldn't be buying new, and you're red on both the daily and weekly. Blue is neutral, and green means buy or hold. I look for these MACD divergence dots, which will go away now that we had a big sell-off. I look at my weekly bongo, which turned red, which is bearish. And I look at where we are in the high jump bar, and we got down to 0 on Thursday, which is partly why I thought it would bounce. But we started to move up off the bottom, so the extension to the downside is abated. I can't say that that looks bullish at all, even after such a strong day on Friday. How about the Dow futures? Same picture, sell signal daily and weekly in big red bars. How about the Russell? The worst of the bunch. It's been in a sell signal now for several weeks. Notice that the high jump is actually at 0. You'd expect this one to bounce just because it's so extended to the downside. We may see that. Then the NASDAQ, after a very strong day, up 2%, all it did was get us a blue bar, which is at least neutral. You still got a weekly sell and a red bar. So I ask you, is that so bullish that you want to go out and buy everything? It might turn out to be. Right now, I'm still a little bit cautious. Look at the US dollar. That's been stronger, but it too sold off this past week, although it's got a weekly and monthly buy signals. So I look at my indexes, and it's hard for me to get that excited to the long side, despite a beautiful day in the markets on Friday, if you were long. I did use it to close some positions, and near the close, bought some downside protection. So if we look at my major markets plus, there'll be 24 different things. Let's do it on a top-down view. Now, the interesting thing was how strong the NASDAQ was. But before I got too excited, I noticed the S&P 500 is in the lower half, and the small and mid caps on the S&P and the NYSE and the Russell and the Dow are all down in the bottom. So this really was a NASDAQ-driven rally. The NASDAQ was much more resilient than the other indices, pulled back and then closed near their highs. Well, I should say closer to their highs, not at their highs. And again, just for completeness sake, I look at the S&P 500. Hold on a second. Make sure I got the right thing here. Okay, I'm going to want to come back to that, but not yet. Just want to check one thing here. Bingo stock. Okay. So a couple of things. The Bongo Weekly has now gone red on the S&P. As we talked about last time, last weekend, I said, could it run for new highs? Does it go down to the 200 or does it hit the bottom of the trend line and pop? Well, I was somewhat prophetic here because the low road scenario down to the 200 hit. Now, I do expect a bounce there. I'm not sure we're done going down, but we did get down here. This gray zone here is a bingo. The bingo's on a very bad day, and it's the baby out with the bathwater. Now, the fact that we have a kahuna firing here is nice. If we saw Eureka, which is the all clear day on the market, that would be our follow through day. So I'm not necessarily going out and buying everything here, but that is made me feel a little bit better seeing that kahuna. But I think I have to see where the market goes. I think there's still risk here. The Dow was not the Russell. We'll go at that eventually. Similar on the bongos. It too had a bingo. It too had a kahuna on Friday. Okay, to the upside. But no, the Phoenix will only occur on the major market and not, we don't look at on every index we put up here. The Russell, so this is what you don't want to see. You don't want to see a breakout and a failure to get back. So this is truly in bear mode. And that was despite it having a kahuna here after one of the initial big sell-offs. It was just a pause day. It's this Eureka here, which is what we in HGSI land calculate as our follow-through day, an all clear signal. The NASDAQ, well, it's different. NASDAQ got back to its 200 in the cash market. It too had a kahuna. But is that out of the woods? Do I want to go buy the farm? Did I see hundreds of stocks setting up? The answer to all of those are no. If I look at the dollar, bouncing around on top of its 50, certainly not weak. If I look at volatility, as we talked about, it popped this week, and even though you had a sort of a shooting star on Friday, still strong. We'll see what the VIX does this week. And with the sell-off in the market, gold popped. Whether this is a fundamental change in gold and it's coming back is possible. I feel a little bit more bullish than I have in a long time, especially with the weekly kahuna popping up, and look at the big volume. But it was also a defensive play, and I think it ran up partly because of the concern folks had with the market. And silver is also strong. All right, now, one of the things that I do for a long term is I look at that chart I showed you here. So let me talk about what I see here. So this is the S&P 1500 going back a number of years. Now on the S&P 500, I actually did a study that I showed at one of my recent meetings. And I went back, and the study's not on this chart. Okay. But what I have is a large number of moving averages. And I have the MACD, I have volume with Eurekas and Phoenixes, and I have kahunas, I have the Hindenburg-Omen, and then I have the weekly bongo. And what I'm looking at is price in relationship to a series of moving averages and the MACD histogram direction. I want to be going long when I'm above the moving averages and my MACD histogram is positive. I want to go short or out of the market when I go into the moving averages. When I break under the moving averages is what I see in a bad market. You do not want to be long the market from when it went in here, which would have been in May of 2008. You really didn't want to get out until the middle of back in until the middle of 2009. And when you see the moving averages turn over like that, you know you're in a world of hurt. So as I look at where we are, despite the pullback, bottom of the price bar is where my arrowhead is. We're still well above the moving averages, but a sell-off this coming week is going to put us in those moving averages. So I'm not saying the coast is clear. The MACD histogram has just turned negative. So right now it's a don't commit new money to the longs and protect yourself. But I'm going to wait and see, as I've said over and over, is this a V-shaped bounce, or more likely are we going to pull back some before we set a new base and break out to higher highs. I think we have some more negativity before that happens. Next thing I like to do is take a look at what led the market. Now, obviously, Friday was a very strong day. So of my 174 groups, if I go to top down and go to 2-day force, 37 of 174 were up, and to the downside, none. So the force was so positive on Friday that none of the groups were positive to the downside. Well, that's no surprise. You saw how much the market moved. If I look at 5 days worth of force, I've only got 5 groups that are up over with positive force or momentum over the 5 days of last week. Metals, consumer electronics, department stores, packaged food, and other consumer products. A pretty defensive looking group of stocks. If I look at 5 days to the downside, I've got 83. So for the most part, most of our industry groups are in longer term bear mode. So let's just very quickly take a look at some of the things that we're working on Friday. Internet media. So if I change index group, Google, Baidu, we'll look at a couple of these. I don't want to go into too many charts because I think the market's much more important right now, but I'm sure some people will be much more aggressive than I am and might be taking a bunch of long positions early in the week, believing that we have a V-shaped bottom. I need more information before I put my money at risk. Hold on a second. Do you want to be buying this? This is what most of the stocks look like. Breakdowns below the 200, bingos, a lot of kahunas, relative strength worse than the S&P. I'm not that excited by Google. Might be a great buying opportunity, but I'm more concerned that Google and other stocks like this, I mean, they could just go straight up to new highs. I think they're more likely to run up to the 200 and fail. And that's kind of what I'm afraid of and tempering my enthusiasm as I look at stocks in the market. This would not be unheard of. We had long-term support at that 200, and often that support turns into resistance on the way up. So you could be buying Google here. I'd rather see it get up probably above that 200. Here's a Baidu. Again, do you really want to buy into Baidu right now? No, but it had a nice gap up on Friday, hammer on the weekly. It may be time to buy all of these. I'm just not a fan of stocks and downtrends. I don't know. All right, so go back to Twitter. Nope. Snap. IQ. Did any of these come off as bullish looking chart patterns? It was the best group. They had big moves and big volume, but doesn't mean there's a whole lot there that you're going to want to buy. Application software. Again, some stocks with some great names, great stories, but not down to the 200, but Salesforce pulled back hard. I still think it's got to get, the 50 was support the whole way up. I hope it doesn't turn out to be resistance. We got Salesforce, Activision, Adobe, Autodesk. I'm looking for something that looks good to buy. I want uptrends. Intuit, Twilio. Here's the problem I had looking. I see very few stocks in uptrends with the price closing at or above the 50-day moving average with any positive momentum. Second highest group, I couldn't find a stock in here that I wanted to buy. Precious metals and minings, I saw a few here, so let's take a look at a couple. So this is American Barracks. Now, again, is this a change in gold is back? And a Bible gap up on Thursday, kahunas, well, a pocket pivot. Bongos are green. Maybe it's different now. Here's a weekly chart. It's just pulled into resistance lines, although the price of the relative strength rather exceeded the moving average, which is bullish. So this is something to watch. What will make me feel comfortable? Well, let's have to trade above where it's at and stay above that 200-day moving average. Rand gold, similar. Gold core, not so much. SSRI really had a breakout here. That looks interesting. Not so much. Then I like Kirkland too. And you could see sort of a fry pan bottom breaking above the 50 with a kahuna mobile breakout for the squeeze. If I have to buy a gold stock, I might be looking at Kirkland. I might be looking at America Barracks as well. Going down infrastructure software. Again, now look at stocks. These are the ones that are coming to the top, but they're all the same picture. Direct deep pullback and a bounce on Friday. Pullback to the 200 and a bounce. This might be something to look at. Look at this hammer on the weekly. Or is it in a new downtrend? That one must be a buyout. Palo Alto Networks, same story. Deep pullback and a bounce. Is it time to buy it, or is it a risk of going lower? I think these are tough to be buying right here. They're certainly not in big uptrends with a lot of momentum. Now, one that really moved on Friday is Amazon. And, the same pattern. I'd like to think it's done going down, that this is a Morningstar pattern or a high close doji with a kahuna. And we're going to go out to new highs. We've got earnings coming out in 2 weeks. And that's probably, my guess is it'll probably bounce around a lot until we get there. But look at the earnings momentum coming in. I still have a big position in Amazon, but I'll be honest, I've got puts on it. You had intradays down below 1,700 last week before we had a huge rally up to break 1,800 on Friday. Netflix earnings are coming out. Do I see it? Do I have an edge here? No. I mean, it's probably a safe bet because it's sitting on the 200, projecting some pretty significant earnings. Now remember what happened with their last earnings. They ran up, they laid an egg, and they fell off substantially. Alibaba, downtrend. JD, downtrend. Etsy, well, had a nice bounce on Friday, but it's down in its pattern. So maybe you're seeing stocks to like here. I'm seeing stocks to be concerned about. Well, it must be time to get back into biotech. I don't know a lot of these little ones, so let's look at them. All right, here's a stock that went from 9 to 13. I have to do my homework and read about it, so I'm not going to say to buy it. Iovance Biotherapeutics, looks like everything else. Bingos, pullbacks, gap up on Friday. Why? Sarepta. I mean, I'm just looking at a lot of stocks and not seeing anything I want to buy. At least Regeneron is sitting on its 50. That might look a little bit better, but still, it's come down hard. So I'm getting tired, so I'm not going to go through any more of the list. But I think you should understand what my message is. And my message is the markets are not without danger right now. So I looked at a lot of stocks, and most of them look like, I'm sure I can let's pull up Celgene. This is what they look like. Stocks that have pulled back hard, had bingos. Maybe they're setting to go higher, but the risk here is still high. So here's what I picked as some of the stocks that I'm going to be watching on Monday. I think it's more about what the market does than any stocks that I could tell you. I think the market here is risky, but if it does start to move higher, I will take off my protection, but I'll be very quick to put it back on when the momentum stalls. So these are the stocks that made it through my review this weekend. So first thing is specialty apparel, popped up a couple of them, a few expirations, but as you actually wrong list. Hold on, that's not the wrong list, it's the right list. I just saw a problem here. Hold on a second. All right, that's what I wanted to show you. Now let me go here, edit. Okay. All right, so we got specialty apparel, we got oil exploration, production, we got some more mass merchants, which is more retail. It's probably telling a story. I look at the sectors, consumer discretionary. I saw a lot that looked interesting, and I think a lot of this market is going to depend on how these discretionary stocks do. Some energy, some healthcare, some materials, but mostly consumer discretionary, a few staples. So let's just very quickly go through each of these. I'll tell you what I liked or I didn't like. This is Academy Pharmaceuticals. It has broken above the 200. It needs to get above this PSAR dot. The weekly looks strong as well. Healthcare it doesn't have earnings, but it does have growing revenue. Advanced auto parts, nice uptrend, pull back to the 50 at Kahuna on Friday. This is a pattern I always liked. Still looks strong despite the pullback. APC, an energy stock, pull back into the 17, still above the 50. Look at the earnings per share growth versus the multiple. Boot Barn Holdings, I'm not that excited about this one, but it is right below the 50. Had a Kahuna and a pocket pivot, good earnings per share growth. Burlington, one of my favorites in retail, which is perhaps giving us a new buy opportunity. I'd rather buy it in an uptrend. I'd rather buy it when it got above the 50, and that might be where I put my buy stop. But here's a leader that's pulled back, still has good earnings per share growth. Continental Resources, another energy play sitting on the 200. Again, great earnings per share growth. Home Depot got racked despite the storms, and it's sitting here on its 200-day moving average. It's probably cheap compared with its growth rate greater than its multiple. This is probably a good time to buy it, but I'd like to see some momentum come in. Kirkland, here's that gold stock I liked. Molina Healthcare, managed care, uptrend pullback. Again, I'd like to see it take out that PSAR dot and make sure this isn't a more meaningful pullback, but it's much closer to its highs than a lot of other things we looked at. Nordstrom's, why do I like this? Pull back to the 50 with a Kahuna, constructive looking pattern there. Ollie's Bargains, a smaller mass retailer, pull back to the 50 with a Kahuna. Penn National Gaming, I don't know why. I like the earnings per share growth. I want to start looking at a gaming stock. I guess it was this hammer on the weekly was pretty impressive. Probably not that interested looking at it right now. PGT, another home improvement stock, pull back to the 200. Looks good on the weekly. Might be getting ready to go back higher. Premier, this is in the healthcare services company. Nice medium uptrend, still with momentum to the upside and a short-term pullback, bull flag. RealPage, I think they're real estate software, if I remember correctly. This was a great player. It broke down, it just pulled back to the 200 and bounced. Good earnings per share growth. I like the pattern. Riskier because it's so far down in the pattern. Renewable energy, this has been a leader. Sideways moves. I'd like to see some kahunas before I bought it, but it's worth putting on a watch list with that earnings per share growth. Ross Stores like Burlington, a leader sitting on its 50 with a kahuna. SeaWorld Entertainment, again, uptrend, pull back to the 50. You'd like to see some momentum. I showed you SSRI before. Tandem Diabetes, which is my winner of the year that I gave you guys back here in April, which had a great run, pulled back when a lockup expired. And as I said to my friend Scott tonight, if I bought the stock, or my company was bought with stock when it was $5 and now it's at 50, of course I'm going to take some profits. And I think that's what we saw here. Had an approval in Canada over the weekend. They're doing a lot to help childhood diabetes, which also feels good. Target, pull back to the 50. Give me some momentum and a break above this PSAR dot. I'll be interested. And then Turtle Beach. This is a name that got hammered despite good earnings. And they came out, talked about how great their sales and earnings are. Got a big number coming in here. It popped last time with that news. It popped a little bit here in a tough market. I like here for a short-term play into earnings. And then Alta, old name, sort of stair-stepping up, sort of a bull flag here and starting to break out. And I don't know what Verso is. It's a paper company. Pull back to the 50. Like to see momentum. I guess I got enamored with that earnings per share growth. And then Walgreens Boots Alliance, a drugstore, ultimate in consumer staples and safety, sitting on the 50 with some momentum. Weight Watchers, another consumer staple, or the consumer services, pull back. I'd like to see it get above the 200 before I got interested, but it's worth putting on a watch list. Whiting Petroleum, I've always liked this one. Pull back to the 200 might be a good buy point. And then YY, if you want to play a Chinese internet play, this one looks a little bit constructive sideways here, get above the 50. I'll tell you, these things have really disappointed. Look at Weibo, for example. This was a great stock at one point. Not such a great stock here. Oh yeah, remember how I tell everybody, I always talk about this pattern with the indexes, and I've said over and over again that the same pattern happens with stocks, industry groups. Boy, did it happen with Weibo. What a round trip. Fortunately, I made a lot of money and I only lost some of it on the way down. I'm out of this, and one thing to point out that this drop has occurred with continued great earnings per share growth. So eventually the fundamentals don't work, even if they're strong. So on that note, I just want to reiterate that I do have some availability at my live meeting, hgsidoc@gmail.com, if you'd like to reach out to me to discuss that. It's $500. I promise you won't be disappointed. Emphasize that it's a tough market out there. Be careful. And we'll see you next week if there's enough going on to talk about. Bye, everybody. Good night.